Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Tuesday, May 9th, 2023. Before I jump into all the charts, as usual, please click like if you would, if you haven't already. It helps us out a great deal in being found on YouTube. And also become a Wicked Stocks YouTube channel subscriber. It'll provide you notification each and every time new content has been uploaded for your viewing. That includes the daily Apple and daily Tesla report and the occasional stock pick we put for free on YouTube. And also, check out wickedstocks.com, where we offer a full suite of daily and weekly video analysis just like this: the daily Triple Q report, the daily SPY report, weekly analysis on the S&P 500, the NASDAQ 100, the long bond ETF, the TLT, and two individual stock picks every week you never see on YouTube. Monday, we put out a meaningful stock pick on waste management you might want to check out. And so we offer a 5-day free trial. If you enter your credit card information and you enter the payment gateway, you have 5 days to cancel before your card is actually transacted. So you have 5 days to check us out. And there's no long-term commitments. It's all month to month. So there you have it. Check out wickedstocks.com. So here we are. This essentially is an image. It's an image. It's a chart, a weekly chart, showing how we closed last week clearly above the 171.18 long-term channel top. When I say clearly, I mean by the required 1% margin for what I call technical clarity, expecting bullish continuation now over the next 3 to 5 weeks or less to the 182.94 January 22 all-time high. And as we continue into later year and early next, I'm going to call this a 5 to 8 month move up to the 217.88 long-term channel top. Obviously, we hesitated on Monday. There's nothing really to glean from that. It is what it is, and that can happen. The market does what it does. Let's take a look at the day itself. We do have this 174.53 channel top, which I had as an intraday resistance level on Monday, but I'm bumping it up to a session containment level. Not necessarily because I think, well, it can be sold. If you're an aggressive day trader, this is certainly a ceiling of resistance for the day. It's also an upward pivot point for the day. And if we close above it, that does signal the 177.97 formation within several days, which is why I underscore it as a session containment level. I just want you to know that if we close above it, we probably have a good low for the week. Yes, 176.15, a level that I previously had as a session containment level, and I show here as this high last summer. I think that's a July high. Yes, it can contain intraday buying. And in fact, if we push today through that 174.53 level, we may only reach 176.15. But if we close above 174.53, the 177.97 channel top, which is a meaningful structure in its own right, goes back to the early March low, about a month and a half in the making, able to contain buying through the balance of the week. If we tested, say, Wednesday, Thursday, we could come off of here. Ultimately, as I said earlier, 3 to 5 week objective remains in effect back to 182.94, which is the all-time high back in January of 22. That is a 3 to 5 week objective. And so I'm coming back to this chart, 174.53. This is sort of the structure for the day. Our quote-unquote ceiling, able to contain daily buying pressures. And from here, we can ease back into the 171 handle, the lower 171 handle, 171.18, our base of support. On the daily chart, you'll find it at 170.96. And I might add, 171.18, a 1% slip below 171.18 is 169.47 all week long. I need to mention that because if we do close back below 171.18, we may well today, for instance, I don't anticipate it, but if it did occur, it really doesn't mean a whole lot unless we close at or below 169.47. And then it is beginning to look like a failed long-term buy signal, in essence, a valid sign of weakness as we move into June. We're not there yet. I'm just kind of giving you the heads up in terms of what are the conditions that would satisfy that. So if we close at 170.96 or 170.76, We need to let this thing play out into later week as to whether or not we can anticipate bearish continuation. The market selling off, if you will, as we move into June trade. That becomes clear for me if we settle Friday, for instance, at 169.47. Even if we close today at 169.47, that doesn't look good, obviously, and I would anticipate something along these lines here. Closing below 171.18 by a 1% margin, 169.47 or lower today, indicates 165.33 within 3 to 5 days. That could be by Friday's close, where we can place a weekly low. But if we settled the week Friday at 169.47 or lower, that is a clear failed long-term buy signal. These often have opposite signs of bearish continuation within 3 to 5 weeks or less, down to 156.52. So if we close at 169.47 or lower today, you don't have a strong argument for me. If you reach for 182 out of the money calls, for instance, on Friday when we close clearly above those channel tops, and I can go back to this chart here. If you reach for 182 or 183 out of the money calls when we closed above the 171.18 formation last Friday, you may cover those because the market is telling us it is likely to continue south to the 156.52 formation over the next 3 to 5 weeks, I would say, where we could bottom out into possibly through July. And there's going to be a series of steps. There's another channel bottom that'll be coming up here in the mid 140s that could be the ultimate target. We'll be showing those if we close below 171.18 by that 1% margin of 169.47 or lower. But until then, this is a market to buy. It is showing longer term strength, expecting 182.94 by the end of June, this 217.88 formation attainable perhaps by the end of the year. I'll say that if we close above 182.94, that would be a secondary buy signal, another reason to be or get long this market. And once again, 170.96, 171.18, bottom picking territory. If we close below it, doesn't look good. If we close at 169.47 or lower, certainly doesn't look good, as I would expect the 165.33 area over the next 3 to 5 days. And honestly, if we then close the week at 169.47 or lower, 156.52 and rising gradually, a 3 to 5 week objective. But until then, that's really, I'm going to go back to and kind of finish up, I suppose, with kind of the day trade dynamic, the 3 to 5 day swing trade. Now, in terms of the 3 to 5 day swing trade, you should be long anyway following Friday's settlement above 171.18. And I would say that this 177.97 formation remains our 3 to 5 day target. So that is a 3 to 5 day swing trade, being long above 171.18, expecting 177.97 where profits can be taken. If we close above 177.97, another 3 to 5 day swing trade to the upside to 182.94. In terms of clarity on that 3 to 5 day swing trade, it is 174.53. So we could back off from here back to 171.18. But if we close above 174.53, that is consistent with the buy signal, 177.97, then likely tomorrow, I'd say Thursday at the latest. Holding below 174.53 does allow 171.18, and that is really the day trade, really. Below 174.53, you can delicately play the short side down to 171.18. Above 174.53, get long, stay long, up to 176.15 intraday, potentially 177.97 intraday. But if we close above 174.53, 177.97 likely tomorrow. I don't think there's really anything else to say. I've said it all. All the minor points have been carefully chosen. Please click like. Please click subscribe and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Apple Report. You have a great day.